Good evening, I'm Giuseppe Basile, I'm the analyst and trading mentor. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Monday, May the 12th, 2014. It's 9 p.m. time in Toronto. And this video I'm going to review for you the all the 11 markets I follow. This video is a follow-up of the 3 videos I've sent out yesterday in my weekly review, which I send only to my free newsletter subscribers. So if you want to receive those videos, just subscribe for free. I hate spam as much as you do. I only use the emails for the purpose of the communications. So let's start from the euro dollar, which is what you see on the screen. Yesterday I mentioned the fact that this market is going to test the 137.21, and if we get a bounce from here, that could be an opportunity to sell into 137.21. Of course, we want to get a bounce and then a violation of the sequence of measure move on the smaller time frame before we can actually trade the euro dollar short. We don't know whether the dollar bear has finished just yet, and we don't know whether we saw lows, multi-month lows in the dollar. We cannot say that just yet. So I will keep following this market and studying this market on the smaller time frame. We do the SP 500. We saw this market breaking today above that previous size. So it's looked like that the selling has been going on in the selling we saw around this 1882. The distribution has ended, and that could be an outcome and result of the dollar strength though, so be very careful here. This is the first target of an extension long that is a busted extension long. So the current situation in the dollar can actually keep pushing this market higher. We don't know what is going to happen there. Moving to the dollar, you will remember that yesterday I mentioned the sequence of measure move and how the latest sequence actually failed. We saw this level 80.09, 80.07 here providing a resistance and bringing pressure into this 79.07. The next measure move in this sequence failed. So there are now two, and actually this is can be clearly seen here because price climbed 2 days ago above this 79 CCG. That was Friday. So at the moment the whole sequence has failed. The whole sequence started at the beginning of February here. So we are going to have two levels of resistance we have to carefully watch here. The first one is going to be 80.30 level, and this is the starting level of an area of resistance. And the second one is the less reliable level of resistance here, actually area of resistance we are testing at the moment. So my anticipation is that we are going to break above this 80.07 and then test the more important 80.30 here. Is a much more important level. To me, the end of the dollar bear for now would be if we break above 80.64. So that's the level I'm going to watch. Gold again is actually confirmed support here for the first and second and third, fourth and fifth, sixth and seventh, if you wish, 8th time. We saw participation at this 1285, 1286 level, and we're probably going to continue to see that level of participation. Now when we look at the sequence of measure move short here, so you have to imagine that here 1285, there is that area of support, also support starts. We saw actually price hitting first target here at 1282, but the price did not continue lower, but the next extension long actually failed, and that's traced from lows to lows here, and it failed when price climbed today above this 1296.20 30 here. However, we have to be very careful here because there is an opposing measure move here, but as you can see, this opposing measure move has failed. So it means that the bear of the back of the bears, as I like to say, has been broken, and this market is now retracing and has the potential to retrace into the all the way halfway back. So there is a good opportunity here. If price tests this 1293.50 and reverses, this is a good entry, and if you are aggressive, you can use a stop below this 1290.80, below this level. Otherwise, I mean, that's not needed, because you can always look at the sequence of measure move on the 15 minutes, what I call the actual Fibonacci stalking technique. So you stalk the market here, which already confirmed support, until it starts reversing, and then the entry point. And this can be done in a procedural way. If you know a little bit my work, just research on my blog. As you can see here, we have a sequence of measure move. The measure move here short is 12.99. When this sequence fails, that's an entry signal. Moving to the Japanese pairs, I want to start from the US dollar to Japanese yen, which actually already on Wednesday had confirmed this measure move higher. And actually, you will remember that I traced this 101.89, and I said when we actually break above this level, that's an entry. Actually, this market actually the level the safer level that you could use is always the traditional measure move here. So from highs to lows above 101.89.90 with a stop below lows, this market became an entry. However, I also showed you yesterday that we had this 102.22 opposite measure move that wouldn't allow us to have a free risk trade here. So entering this long was a little bit riskier than normal. Now at the moment we are at this 102.22 area of resistance. So we can anticipate a continuation higher, but we always have to keep in mind that there are players from on the opposite side, and there is no need to rush. So if this market actually, if this level of resistance keep working, the market will be pushed again into the level of support. Moving to the euro versus Japanese yen here, same situation, and actually again I gave, I believe, on the 15 minutes here the level that you have to watch, this 140.50. Its break today, this is Monday, above 140.50 was an entry with a stop below low. So at the moment I would continue maintaining this position and see where this position can bring us. Of course, in order for this market to move higher, it means that the euro has to be stronger than Japanese yen, and we don't know that just yet. But we trade technicals. This level has been confirmed now for the third time, so it's quite an important level. There is participation at this level, and we confirmed using the Fib stalking technique. Moving to the pound versus Japanese yen, same story here, and again the sequence of measure move that confirmed this market was actually the level that this 160-162 level, and the reason for that is there was an extension short from because there was initially short here, traditional short. Price went into the first target 171.65, second target 171.32, and then the next extension actually failed, so the confirmation of support was this was price moving above 171.61. This market was stopped out and then eventually start moving higher. So when that happens, there is an opportunity to re-enter. It doesn't happen often. When that happens, you can re-enter and actually have even a smaller risk, which actually would make more than the stop out. And finally, I would move to the last four markets. The pound versus US dollar is the first market, and we know that this market is actually at the moment it's actually traded at a very important level, and that was the next measure move in the extension long from actually this high to high, and as we can see, we saw some profit taking at this 169.59. So the situation, as I told you, the situation in this market is very similar to the SP 500. So he found resistance, actually profit taking at the first level here. So it is possible for this market to come and retest the old way halfway back. If that happens, that would be an opportunity to short this market, but I would actually assume another viewpoint here, actually going short when we break the sequence of measure move higher here. At the moment, this sequence is being respected. The market has next target 169.19. Moving to the Australian dollar versus US dollar, and starting from the daily, this market is reacting at that level that I provided on Friday. No, actually on Thursday and also in the weekend. This is the first measure move after the initial move lower, which never traded, as you can see here. So there were some resting orders in this at this level. So there is a possibility for this market to just continue lower. If you review my weekly newsletter, you will see that this market is in a long term move lower. Now we will need to see what happens when this market trades again the all the way halfway back in this last swing from lows to highs, and this could be actually an area of support. So in terms of area of support, this is the 092.97, which I traced before, and actually a confirmation could come when we actually, if and when we break this 093.21, which is the stop area of the next measure move higher. The US dollar versus the Canadian dollar, so actually a very important level being breached here, and you can review my post on the blog and also on fxtrade.com, which tell you why that break was important. So at the moment I'm looking for a retracement of the US dollar versus Canadian dollar into either a 109.93, or we could do even a retrace higher here into the all the way halfway back. The point is that by violating that important level, the 109 level, actually this market that was the 109.17, 10.11 here, and that was the initial support actually. By violating the stop level, and you can review my previous video, this market has confirmed that it can go much lower, and it could go at that 104.53 before start moving higher again. Remember that at 112 we also had weekly program trading and professional traders shorting this market. Finally, New Zealand dollar versus US dollar. This market is still in a sequence of measure move higher. The next measure move in the sequence is 0.8585, so do not assume that this market is going lower. This is profit taking from an extension long, and you can review again. Please review the weekly newsletter. If you subscribe now, you receive the last 6 numbers of the newsletter. So if we get into this 0.8585, if we never break below 85.39, then there is a potential for this market to just reverse and keep moving higher. If 84.39 is breached on the downside, we move into 84.15. Thank you very much for your attention. Thanks for sticking around. Subscribe my newsletter if you are interested. Send me emails and your comments about the this analysis, and have a great trading day tomorrow and continuation of the week trading and non-trading week. Bye bye now.